The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 18th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow traded up 83 points at 18,169. S&P up 16 at 2142. NASDAQ Composite up 59 points at 5259. Russell 2000 up 11 points. The DAX closed up 127. The FTSE up 52. Am I going through this too fast for you? I try to slow it down. It's just not in my DNA. The gold contract, that's up $7, trading at $12.63. Silver is up 18 pennies, trading at $7.65. Light sweet crude up 4 cents, trading at $50.41. Lead the charge here to the upside. You've got Google Alphabet Soup up $19.74. Right behind it, drafting right behind it, is Netflix up $19.58. That's a 20% move to the upside. Priceline's up $17. The stock of stocks, though, it is Domino's Pizza. All of you, I can't remember the last time I ordered a Domino's Pizza. I did try to buy a Domino's Pizza franchise back in 1989. That's a whole nother story. But that stock chart, to the moon, trading right now, believe this or not, 163 buckaroonies. Back in 2008, at the lows, $2.50. You go calculate the return. If I do that for you, I'm liable to make a mistake. So I'm not going to do that. I can tell you that is one heck of a return on a stock. So that thing is nearly at all-time highs, just maybe a buck away from that. So Amazon is up $9. To the downside, you've got Grainger Worldwide off $10, about 5%. IBM down $5. Volume there is about 8.3 million shares. You've got Lear Corp down $4. Johnson & Johnson. I saw the CEO. He was proud of the performance, but the basically shareholders not so proud, down $3. We'll see if there's any volume behind that move as well. So again, 877-927-6648. Okay, so what are these markets doing? You know what I'm going to provide to you, because some of this is really going to be dependent upon end of day data. So it's going to really be about where the market closes. So we'll take a look at where we're at now and what its meaning is. And then we'll take a look at and then you'll have to go, you'll have to write these numbers down on a pad of paper. So make sure you've got your number 2 pencil out. You remember that number 2 pencils? We used to use those number 2 pencils. What was a number 3 pencil, by the way? I don't even know what a number 1 pencil was. Why did they call it a number 2 pencil? Actually, I know the guy that we could call on that, but maybe you already know the answer to that. I do not know the answer to why it's called a number 2 pencil, but you should have one ready, sharpened up with a pad of paper, and you can write these numbers down. So let's go to what likely is really the most important number for us to pay attention to. Now, what do you think that's going to be? Where do you think I'm going to pull that from? No, you're wrong. I'm not pulling it from there. I'm pulling it from the stock charts out here. And that stock chart that we're going to take a look at, the diamonds, that is going to be one of the places that we're going to look, but that is not where we're going to go to right now. So that's a good conclusion there. I'm going to give you the number that is the most important. Now, I'm going to express to you why, or first I'm going to give it to you. Then some of you are going to say, that's, the B before the S, or how can you say that? How can you actually say that this is the most important number of everything that you're looking at? How is it that you can actually say with certainty, right, with absolute certainty, that if X happens, so will Z, or something along those lines? And so let me show you, right? Let me just simply unveil the curtain here. Yes, there we are. So if you're watching us on Tiger TV, you see that we are now looking at the cash VIX index. This is where we don't really care what people say about this. What we care about are the patterns that are so conclusive with inside this index that it assists you with regard to what the market wants to do. Now, I'm going to share with you something here that I don't share with folks too often, not because I don't want to, but you got to keep some tools, kind of keep them in your tool bag out here. But first, let me give you the number that we're going to pay attention to. And the number for the VIX, as we speak right now, that number is $15.50. So take that number to pencil out. And in fact, I want you to go ahead and check me out on this. 1550. Now, at 1550, happens to be Stevie's blue line on my chart out here. At 1550, if the VIX index closes above 1550, and even if it's 1551, or even if it's on 1550, of course, on 1550, that's like a coin toss. So we'd really prefer to see it close above or below. Right now, you're trading out at 1535, below the 1550 number. If the VIX index closes above 1550 and somebody's asking the question, should I put my shorts on? Not because you live in Florida, because, the answer to that is basically always yes. Thank goodness. But with regard to the stock market, if you close above that, put in the checkbox that is one of the elements that you would look at that says, yes, counter trend rally, put your shorts on. If you're taking a look at where the markets are at resistance, that we should be there. Well, we'll go take a look at specifically, in this case here, would be the S&P 500 that we would look at. Now, why? Now, let me tell you what's going to happen. If to the VIX index, that is, if in fact you close below 1550. And you know how I hate to guarantee things, but I can really guarantee you that if we close below that, and I know you're going to say, how the heck can you do that? So let's just get rid of the word guarantee. Let's just go pay attention to what has happened all of the time. Okay, so all of the time instead of guarantee. If you close below 1550, what the VIX index is going to do, it's going to make a run for that number, that 1420 level. So as AG put in the Tiger's Den out, is going to be that 1550 mark. You close below that. Every time the rubber band snaps, when we take a look at the VIX index, and you get above that blue, oh man, and I'm having internet issues here. So if we drop off, man, I'm going to certainly apologize. I'm sort of running on fumes here, not me personally, but we were lucky really just to get back up. I'm going to have to repost this chart. It looks like I'll do that. Let's just cross your fingers, send out some kind of light white, preferably, that I'm able to stay up on the internet basis here for the remainder of the show. My goodness, I hope we can. Right back. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so hopefully with your number 2 pencil, you wrote down that number 1550. And I have seriously been having some major internet issues here. Came up just like 10 minutes before we went on the air again. So that's a beautiful thing. And if we do fall off the air, they've got something in the background to play for you. But you've got the most important number 1550. Here's the reason. When the VIX index spikes above the blue line, it's kind of like out of bounds. Now, in this case here, it can continue to run out of bounds out there. We're not going to. What I really want to focus on is when the VIX index gets above this threshold level and then back below it. What it does when it closes back below that blue line is it runs at least to the 50-day exponential moving average. At least there, because it can easily make a run to that lower boundary line out there. But at a minimum, it makes a run to that, in this case here, it'd be 1420 level. Now, if the market is going to do that, that's going to give it plenty of liquidity, plenty of legs, plenty of energy to go ahead and continue moving higher. And that's what really is the most important thing for you to know. You can say, how do I know that? We're just going to go back and just this way here, because I don't want you to believe anything that I tell you, even though you should, because I do my homework. You know, I'm here to cover I've got your back. It's really not any more simple. Not any more simple? Good Lord. It is not simpler than that out there. Take a look at last time. In this case here, this is back on June 28th, 29th. Price gets back in it. And in this case here, it ran all the way back down to the bottom of the boundary line out there. Speaking of boundary lines, tomorrow night we're going to be doing a workshop. It's not on these boundary lines. I'm going to teach you some excellent, extraordinary boundary lines that you want to be able to access. The easy way to attend that is come over to the homepage of TFNN.com. Sign up for my newsletter service. You'll get that workshop and 4 others that are extraordinarily helpful to you. Take a look at, we get out of bounds, so to speak, right above that blue line out here, May 19th. Once you get back inside it, you head down to the 50-day exponential moving average. We come back here into the time frame of February 16th. Well, you know, you were above it the day before. The day before that, you get back inside. Where's price head to? At least to the 50-day. then all the way back down to the bottom. Come back in here during the trading session of January 22nd. What do? You run down to at least the 50-day exponential moving average. What happens here when you get back inside it, back on December 15th? You run at least to the 50-day exponential moving average. You see, we can go back. Are you getting the picture out here, right? You get back inside it on September 10, 2015. What do? You run back down to the 50-day exponential moving average. You see, this is a pattern that for most people, they just simply aren't aware of it, would ignore it if it was out there. And look, is it going to fail at some point in time? Yeah, I suppose so. But I would take you back right now. I do not want to waste your time, especially because it could be limited, depending on the Comcast out here. NBC, no business running a cable station, I guess is really what it stands for out there. But in any event, if you go back to your charts, you take a look at it, and you're going to see a pattern. Now, isn't that way more beautiful, even though that sucks with regard to grammar out here, but you know what I mean, Kelsey grammar, that knowing that pattern, isn't that a whole lot better than saying, geez, the market is complacent, or that you've got a whole lot of volatility? And what the Sam heck does that even mean out here? Instead, what you now have is a pattern that you can use this for the rest of your life. You'll be able to use this for the rest of your life unequivocally and make an extraordinary trading decision. Now, of course, if you're a long-term trader out here, this means hogwash to you. You want to take a look at other patterns out here. But many of the people that tune in and are watching, listening to the show, really what they're looking for are patterns that they can utilize for the long-term trading, or they're actually, shorter-term traders out here. So 1550, I can't harp on it enough. I won't harp on it enough. I can't possibly harp on it enough. It is the one and only thing that you need to watch the rest of the day to be able to identify whether the market's going to go higher or not. Now, if you close above 1550 out there as an example, then that could be your so-called shorting opportunity. You're going to say, well, how can you say that? I just did, actually. And the reason that I'm going to say that is because what we'll also likely see at the same time is price close below Stevie's red line. That's the red line you're looking at on my chart right now. That is the oscillator unchanged line. Remember, what the S&P 500 has done here recently, a few days ago, last week, is it has given us one of the biggest shorting signals since the highs that were formed around December 30th. And then you can go back to August in 2015. So we don't ignore this pattern. But if price gets above my red line out here and the VIX index is below that 1550 level, that signal with regard to curtains out here kind of goes away. Kind of the curtain falls with regard to what's going on inside the S&P 500. So that number, which, by the way, we're basically trading at it right now, but I want to give you the real number. Now, of course, this is going to change during the day because of the, this is also price sensitive, so to speak. So it's always doing the calculations out here. But it's 2143.11, and we are at 2142.65. So the reality is right now, the VIX index is saying not so fast because it's below that 1550. So would I want to short the market right here, right now? Yeah, okay, with a tight stop, or we got to go find some other reasons. Got to go. How do you like that for a technical term? But we should go take a look and see if we can find some other reasons, maybe. But, if you get a close below 1550, you get the S&P 500 to close above 2143. What does it mean? It means that shorting signal is short-circuited. Okay, and it says that price is likely to go higher. Now, it may just be a one-hit wonder. It may just be a one-day move tomorrow before the market goes ahead and sells off and so forth. And I'll show you some reasons why. Look, we have been in really a tricky market environment. What the heck do I mean by that? What I mean by that is we, in essence, have been in a version of a consolidation. You say a version. What the heck is a version? We've pretty much been inside a version of a sideways consolidation intraday trading market. We've been able to rely upon the 30-minute charts for extraordinary signals of the market making turns out here. Well, then that being said, and AG wanted me to go look at the Dow, which we could, but AG, the better signal would be coming from strength. Yeah, the Dow's been weak out here, and not that we shouldn't look at it, but right now at 1:25 in the afternoon, the better signal is really what is going on in the strength marketplace. Hey, we took a look at the you had Google up $20, you had Netflix was drafting right behind it. Domino's Pizza not a part of the NQ, although I'm sure they're wondering why aren't they part of the NQ at $160? Are they still a small cap stock? I don't think so. Really? 160 buckaroonies out there. That thing, shoot, they ought to put that in the Dow. I was just being very facetious out here. But here, the NQ has been moving higher and doing it with one of those patterns. No Wave G, no Stevie Wonder, as you can see out here. We can go from any swing point we want. We've blown through those. Now, typically that means, by the way, because these have been reliable patterns. When reliable patterns fail, typically it says you got to go down to a shorter, the next time frame chart up. In this case here, we go from 30 to 120 minutes. But that's only one pattern. A more reliable pattern is that old rubber band, that little slingshot there when price moves higher, does with less relative energy, and the bears show up. Well, I got to tell you, the Chicago Bears or the Grizzly Bears or the Bears showed up at 1 o'clock as we were coming on the air. You see that little bearish engulfing candle, bear sash candle, key reversal candle, all 9 yards. Now, price on a 30-minute basis isn't below my red line out here. It's actually no confirmation of a short-term top out here. It's just not in just yet. Could be. Got to get below Stevie's red line, though. Hey, that's a part of the workshops. You signed up for my newsletter service. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Sean, the answer is 50-1. That was an email that came in. And so, Sean, I'm sure you're still listening. 50-1. Go ahead and try that and see what you get out there. Now, I see another question coming in here regarding, Steve, I'm both long ETFs and wonder what you're thinking about riding them out, GDX and GDXJ. No, Nugget and JNUG out there. So, yeah, it's best to, well, let's do this here. Let's just go take a look at the XAU. I'm going to do that. Let me just switch over to a different set of charts out here. See if we've got some reversals, looking for the patterns that you and I like to trade, and we really do. So this is giving us, gold's up $6, silver's up 16 pennies out there. So that's what you want to see. Now, what I'm referring to, take a look at what the XAU did when it made its most recent high, right? Seventh wave moved to the upside, price moving higher, doing less relative energy, right? You and I, we look for those patterns out here. They occur time and time and time and time and time and time again. And it doesn't matter whether it's a daily chart, a weekly chart, a 10-minute chart. You want to pay it. They happen on 1-minute charts too. But that's a whole different kind of a trading style out there. But certainly we can see price here was moving lower, doing a less relative energy. Didn't get to wave number 7, got to wave number 5, E down there. That's really not what matters. We're not necessarily, hey, is it nice when all these patterns come together at one time? Yeah, it actually makes the trading decision simple. The reality is, all of these individually are extraordinary patterns. These are patterns that I teach that are part of this workshop that I'm going to be doing. I'm not teaching you in the workshop. They get access to the workshops that I've done recently during the past couple of months out there so that you can view them at your leisure, including tomorrow's workshop, which you can view at your leisure. You don't have to actually be there on a Wednesday night between 5 and 6. It's on your members page the next day. You can access it for 30 days. You can give me calls, all that type of stuff out there. I want you to, I'm not doing this to waste your time. I want you to learn these patterns. I want to be able to, as they say, set you free when it comes to technical analysis out here. And that way you'll know what the market is doing. You won't have to rely upon me or anybody else. And that's really what it's all about. So you make all your own trading decisions. So with regard to, Tom, with regard to your question, should you ride out GDX and GDXJ, I can tell you that the XAU put in a nice bottoming pattern out here. You got price moving lower, doing less relative energy, get that bullish reversal signal. Today you actually have a slight gap to the upside. So now you've got your third bullish reversal signal at the bottom, and today you're pretty far above Stevie's red line, that oscillator and change line, 81.94. Now what do we need? We need gold and silver, by the way, to continue moving to the upside. What's going to perhaps cause that? Well, first, this is the first real Gartley buy pattern that we have had, for example, in the GDX since it's really the second, but this is the largest one out here. This is really the Gartley buy pattern since the lows back here in January 19th, to be specific out here. And, of course, a Gartley pattern, folks. This is one where you've missed out on a big trend, or maybe you caught a portion of that, and then you're looking for when do you get back in. And the when you get back in is when you've actually formed the first Gartley buy pattern. Well, in essence, that has completed here inside of the GDX, inside of the XAU. So, the time is now. Now, with regard to those of you that here, I want to help to alleviate those fears with regard to the U.S. dollar index. In fact, let me do this here. We'll do a combination of things out here. Here is the U.S. dollar index. And just for the blanks and giggles, you fill in the term out there and you have some fun with it. But for that, if we take a look at what wave are we in that is being confirmed today, you sing along with me in the key of what? That's right, in the key of G out there. So in the key of G, right, which the U.S. dollar index appears to have formed yesterday, unless we take out yesterday's high. Doesn't seem like it's going to occur out here. Now you've got your potential reversal signal. Now, everybody, it's talking about the Fed's going to go ahead and increase interest rates at some point in time. Yeah, we probably not November, but even, who knows whether it is or it isn't. I each Friday, typically I don't do it on Fridays, by the way. It's usually on Saturday or Sunday while I'm watching football and just kind of relaxing. Doing some of this stuff while I'm watching football is actually relaxing for me. So each of us have a different form of relaxing, do we not? And one of the things that I do is I go through a lot of the commitment of traders data. And some of you may do that as well, and some of you may be wondering, what the heck are you even talking about? Look, the CFTC provides us with a lot of data. Sometimes it's useful, sometimes it's not. I find it useful to at least understand what the individual traders are doing, what they call, talk about Hillary Clinton calling people deplorables. The CFTC calls us non-reportables, although I do think they changed that definition. And maybe Mr. Z can tell me. I think I was looking at their legend key at one point in time during the year, and I think they changed it from non-reportables to something else. But they used to call us non-reportables out there. If you really want to feel insignificant, the CFTC does a real good job of making sure that you and I feel pretty insignificant out here. But they also show you what the significant guys are doing, what we refer to as the commercial traders. Now, with regard to you're wondering, where the hell, are you going with this? That's the second time in a week that I have done that. I apologize for that. It is not like me. But you're wondering, where the heck are you going with this? And because we're in the U.S. dollar index, one of the things that I do, the U.S. dollar index is just simply a basket of 6 currencies out here, right? You've got the euro, you've got the yen, you've got the pound, you've got the Swiss franc, you've got the Swedish krona, and you got the loonie. All right, you got the Canadian dollar out there. That's what makes up. But there are plenty of other currency pairs, which, by the way, you can get access to that information inside of the CFTC data, the futures data, and just try to understand how our commercial traders position themselves. So I do a lot of this spreadsheet data, and hopefully it's the right data, for goodness sakes, but it's consistent. If I'm doing it wrong, I'm doing it consistently wrong. I think I'm doing it right out here. And the interesting thing is the way that commercial traders are positioning themselves is they are positioning themselves to be net short the U.S. dollar. And it's not just with regard to only this basket of currencies. I'm not just looking at just this basket of currencies, which would certainly impact the U.S. dollar index. So the interesting thing here, Tom, now, back with regard to your question, should you ride it out? The answer is, yeah, I think that you should ride it out with a stop in place. That's the only way you and I can trade. We look for information. We don't have to worry about it each and every day out here. You've placed your trade. You put your stop in. Is this possibly a good bottom and a significant bottom? Could be the most significant bottom that we're going to see for a while inside of the GDX. Of course, the other way could apply too. Maybe it's not the most significant bottom out here. But with regard to those that have the belief that the U.S. dollar index is going to continue moving to the moon out here, I've got news for you. There's a whole group of traders out here, commercial banks and otherwise, that are not that afraid of what the Treasury's going to do or what the Fed's going to do with regard to interest rates out here. They are making a beeline for the other side of that trade out here. No, they've got a whole different trading style, and so, but it helps to understand what they're doing. Because look, folks, if I had gone to that data and saw and calculated that they were moving to a much more net long position, I'd even have to question and say to Tom, I don't know, Tom, whether you should ride this out. Fortunately for you, Tom, I do know. The answer is, yeah, you should ride this out with a stop in place. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 85, S&P's up 15, Composites up 58 points out here. Question coming in saying, Steve, where are we with regards to the election process? Can you share with me where we're at? In essence, that was the question. So, let me go ahead and share with you where we're at inside these markets. And really, the way to answer that question is to understand the cyclical patterns that are the potential undercurrents of the market out here, so that I can really put all this together for you. Now, this first chart that is up on our screen, it's kind of one of the holy grails of trading out here. The whole idea, I like to think that the whole idea of the show that I do and everybody else here at TFNN does for you is to make some sense out of the market, right? To make this a lot easier than the way that others might want you to believe. And so this would be the first chart. This would be the standard chart. I would never ask you to do something that I don't do. That is for sure. That is for gosh darn sure out here. And this chart is etched in stone in my children's head. They'll be able to use this forever. I've shown them ways to go ahead and modify it throughout the years as they get more and more data. You should always do that, right? More data makes things easier. But if you're going to pass along anything to your children, which you should, and planning for their own retirement out here, the number one thing to do is put that retirement money, to the extent that they can control it, but it's Roth IRA or whatever it is, put that money into the account on January 30th. Anytime towards and if the market is moving down, don't be a deer in the headlights. Just go ahead and get in there. You don't have to, you're not going to time it exactly. You're going to be really darn close out here. Get that money in. Don't wait till April 15th. About the worst thing you could humanly possibly do, okay, and it's a disservice. Quite frankly, by our government out here. They're the ones that should be out here, that should be letting people know you're missing out on a majority of the year's returns. That means you're putting your money in and not really getting it to go to work for you until about November. Right, you put it in by April 15th. You get maybe a little bit of it's disgusting. Don't do that. So the first time period that you're always looking for the market to move down into January. That's a seasonal pattern. It's been like that forever. Does it always work? No. But is it going to work a majority of the time? Yeah, and I'm interested in providing you with a majority of the time of information out here. We'll deal with those other idiosyncratic times. Hey, that's a big word out there. Not even sure if I properly used it, but boy, it sure sounded pretty smooth. And then the market makes its basic high. Forget about sell in May. Yeah, sell in May, a little bit of prophecy to it, but really they sell in July. And just think right around July 21st, give or take a few days. Now, should they sell the market? No. What I want you to do is just have your seatbelt on, and know that the market is going to make a high. And then the next time you want to stick your money into the market is October 13th. Now, October 13th happened to be last Thursday, by the way, when the Dow made its lowest low at this stage. Is that a coincidence? Do you think I wrote that date in here just now? Come on, you go back and take a look at, months worth of me showing you this chart out here. That is the annual cyclical pattern that is out here. End of story. Yeah, it changes by a day or two depending on trading days out here. But that was, this was calculated, in essence, years ago, right? It was really, the chart, of course, I did, back in 2016, early 2016. So that's the normal pattern that is out here. And if we go take a look at the actual chart, where are we in the Dow, just to remember those things. If we take a look at, now, it wasn't January 30th at the Dow. We're looking at the Dow, by the way. That data is all for the Dow out here. The market actually formed a bottom on February 11th instead of January 30th. Really, there was a first bottom came in January 20th out here. But January 30th would have worked this year as well. So February 11th instead of January 30th. That's the red notations that are on my screen out here. And if we take a look at when the Dow actually made a top, it just happens to be July 20th, 21st out there, as expected. Yeah, the market came back and made a slightly higher high back here August 15th, but this works. And then take a look at the August 13th time frame. So, I can't say that the annual seasonal cycle is not a dominant factor inside of the charts for 2016. You can't either. It's an influencing factor out here. It is a possibility that I know this is not answering the question, but boy, if you bypass this, you're missing a huge piece of the triptych with regard to what's going on inside the market. Okay, then we've got the old presidential cycle out here. You say, what the heck's the presidential cycle? Well, this presidential cycle, is a second-term president. That's what we've got in place right now. So do we ignore that? No, we don't ignore that. When does it typically make its bottom out here? Well, it makes its bottom around March 17th. We can say the market did not make a bottom around March 17th. February 11th is far enough away from March 17th that this says, maybe I'm not really working. Interestingly enough, there was a bottom that came in right around that June 25th Brexit date, and then the market moved up into September 9th, and so this was trying to influence our factor. September 9th, we had the 400 or so point move down inside the Dow, and this cycle here says the market would make a bottom right around October 21st. In fact, the first one, you can see kind of a double bottoming factor out here, October 14th. October 13th and 14th. So it's kind of interesting because this cycle pattern, that's why we're paying attention to the VIX, Stevie's red line, because we're trying to understand whether or not the markets are really being influenced by these cycles that are out here. But this is saying today is what is today? The 18th, 19th, the 18th. This week. Last week to this week, if this is the pattern that is taking place out here. Well, we've got one or two other patterns out here to pay attention to. You can see I've got these delineated on my chart out here. And the other ones, there's only two other options that we could possibly have, at least two that I know of. I'm thinking of third and fourth. But the two that I'm thinking of, it's either the Democratic Party is going to retain office when it comes to the office of the presidency out here. And if we take a look at that, happens to be the top portion of my chart out here. But in that case, October 20th, by the way, today's the 18th. See, we really could, if the Democrats are going to retain office, and that's the HRC, right? If she is going to win the office, according to the schedule of when, and I do have the years, I just don't know why they're not up here. That's interesting. What the Sam heck happened there? Must be on a different chart. Oh, this is the wrong chart. I'm showing you the wrong gosh darn chart out here. No wonder the data wasn't there. It's this chart that I meant to put up. But now, the good thing is I caught it, but the reality is we were going to be talking about that top chart was correct and accurate. So between October 16th and the 19th, there we go. I'm glad to have done it now this way. October 16th through the 19th, today's the 18th. is when the Dow would form its next high. See, what's interesting here about this chart, we can't rule this out, is that right around October 6th, the market makes a high, moves down into October 14th. We're going to say the 13th is good enough, and then moves higher into the 16th through the 19th. And I believe on the trading calendar, let me go look at my Funkin' Wagnall's calendar out here. Yeah, the 19th is tomorrow. It still is tomorrow out here. So we could see the market move higher into tomorrow and then start to fall off the cliff. So for those of you that are pulling for HRC out here, you don't mind the bounce today, and you don't mind the bounce tomorrow. Then what you're looking for, if you really are putting your money and you believe that that's the case and you are a trader in the market, then you might as well go full hog short into November 14th. And if that's what the market does, yes, HRC will be the one in office. And when we come back, we'll go ahead, and for all of you that are looking for the Republican candidate, Mr. Trump, well, we'll go show you what his pattern looks like. Interestingly enough, September 9th, when the market made a 400-point move to the downside, that's what he needed to get going, and it worked. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, The first question that came in was where is the long-term pattern for Google? Where is that going to take us to? If we take a look at GOGL, we can see this is a weekly chart I have up on my screen, but we see a breakaway above weekly TAS market profiles, above a consolidation pattern that in essence has been in place since October 19th, 2015. If this is a real break, you're looking at 935. That is the measured move. Not going to happen overnight, 828. However, they're out with earnings at some point in time here. So Google can move 50, 60 bucks in a heartbeat out here. And if this is a real breakaway, then 935, that is on the GOGL. GOOG has a projected price move of about, what was it? The similar price move, but 910. Would be its a target out here. Now, back to this chart out here with regard to if it is going to go from a Democrat to a Republican, right? That's the only other option. Then what the Dow was supposed to do was start moving down in earnest on September 9th. And by golly, it most certainly did that. And then it says that the Dow would form a bottom, its first bottom, around October 14th. Right, October 13th qualifies. Says we would get a retest of that low, and then the final bottom would come in on October 21st. Now, the cool thing about these two charts here is once we get past this week, right, so going into next week, this is when these charts really start to take hold. Because if the market is moving down, then we have to say that the charts are following along Dems to Dems, right? Democrats are going to retain office. And you should be anticipating and expecting a bottom to come in right around November 14th, right around that date. And you want to be looking, you want to make sure you're subscribing to a newsletter service. Mine, Basil's, Tom's, Larry's, David's, one of us, okay, at least who's thinking like this. You want to make sure that you're subscribed. Then, of course, for mine, you get it for 49 bucks right now. But that's besides the case out there, or that really is the case. And you want to be able to identify, because it doesn't always happen to the date out here, when that bottom comes in. And if that is the case, you want to be long and strong, because you will see a move similar to that Brexit bottom move out here. And nobody else is forecasting that. I don't really care what other people are forecasting or not. What you and I want to do is just take advantage of the data that's available to us and get our heads out of the clouds. You thought I was going to say something else out here. A huge move. Likewise, if it's a Trumpian move out here, the bottom in essence has come in, or it's coming in the next day or two out here, and it's really not much of a move. It's not that much of a move. We're back in a consolidating move for a long period of time. So, and that's excellent, extraordinary information. Forget about the fact that I'm the one that actually created it. What I mean by that is with regard to a trading plan. If that's the case, you know we're going to be stuck on these 30-minute charts here looking for price relative strength divergent patterns, the key of G, all these tools that I trade to you or that are available inside the subscription service and those newsletter in the workshops out there. So, and they're helpful anyway. So that is what the markets are doing with regard to the presidential campaign, and we really won't know a lot until we begin next week out there. So I hope that assists you. I saw some questions with regard that I didn't get to out here, or didn't get to yet. One was with regard to the yen. So let me find my, where the heck am I? Oh, here we are. Let's go take a look at the yen. Let's get this off of a weekly chart, although it wouldn't be so bad to keep it on a weekly chart. So let's just do that just for a moment. What do we see out here inside of the Japanese yen? With regard to market profiles, this looks like this wants to move higher, which in this case here on this chart, it would actually be getting weaker compared to the U.S. dollar index. So that would put some strength inside the U.S. dollar index. On a daily basis out here, what do we see? You know, no real reason for me to draw any kind of ABC pattern. This is nothing more than your homegrown consolidation pattern out here. We take a look at the daily charts, and I would show that to you. I'll try to do this real quick here. I'm going to turn off those profiles, and we take a look at the consolidation. And in essence, that's your consolidation. It's still in a consolidating pattern. On a daily basis, the last couple of days, no real huge energy. Take a look at those small body candles. Folks, my time is up. But I'll be back on Wonderful Wednesday. In this case, though, stay tuned, because you've got our favorite polar bear, David White. He'll be up next. Tom O'Brien, 3 to 5, Andy Heck after that. Take care, folks.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.